Alright guys, welcome to the live room. Hope you're doing well. Let's just remove this thing and quickly kick off. Hope you're doing well this morning. It is, what is it? Thursday. Thursday the 1st of December. So yeah, I hope you're doing well. Good start to the month. I always get like I always get kind of a nostalgic vibe around this time. Obviously Christmas, but when it comes to like starting the live room, this was the time of year, like pretty much this week. It was the 5th of December that I started the live room, and I remember the feeling of, starting something great that that could give value to the community, the trading community, and also improve my own trading. And we've been doing it for 7 years now in this live room. So yeah, really, really good. I hope you're all doing well. I hope you had a nice week. In terms of trading, it started off quiet on Monday, Tuesday. And then yesterday's where all the opportunities were, for me anyway. There was a really nice FTB set up on the pound at the end of last week. Monday. But I didn't catch that. All of my opportunities ended up being on yesterday. And I've tried to post out in advance as many opportunities as I was looking at as possible. So one being on the Aussie CAD, we had the breakout set up, and then we had a short set up. And a few people have messaged me going, oh yeah, it didn't play out very well. Look, we've broken up, we've gone to the upside. Wrong. This is why signal services don't work. Signal services don't work because you are assuming too much. You don't know the ins and outs of the trade plan. However, if you was in the live room yesterday, you would have seen me explain exactly how I got into this trade. I also posted this in the platform. I put it in my Discord as well. And it's a very methodical and strategic approach, and it's very particular. And if you don't know what's going on behind the scenes, you're not going to have any idea why I'm in the trade, if I'm in the trade, where I'm looking at placing targets, if I'm adapting my position for any reason. If I've changed my bias, if I'm no longer looking at it, if I'm still looking at it. This is why signal services are a complete joke. Because if you're taking signal trades from people, you don't know. You don't know what's going on. And when you hit losing streaks, you're going to have this thing in the back of your head that's just saying, this guy doesn't know what they're doing. This is broken. This system's broken. And it's a recipe for disaster. So let's quickly take a look at what we are looking at, right? So this was the Aussie CAD setup, and on the Aussie CAD, if I just go out to the daily quickly, we identified that this 9100, I've got this literally on my screen of discretionary numbers on my markets here, 9100. Whenever this level's tested, I start paying attention to potentially aggressive entries. But you can see just over the last, I don't know how far we can zoom out here, but this is like 2018. We've had about 20 touches of that level. Okay. And not only touches of the level, obviously respected that level. We've literally bounced off of that level. It's become support, 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 resistance, 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 resistance. Why does it get respected? Who cares? We don't really care why. We just care that it does. And that, my friends, is called a pattern. And when we can see a pattern that plays out frequently over time, that pattern is based on human psychology. And because humans don't evolve very quickly, right, we know that human psychology hasn't really changed too much for thousands of years. So if we can identify patterns that are representations of human behavior, and then we can build rules around that pattern for a high probability setup, and I'll explain more about that in a minute, then our job as a trader is to just do that and test it and make sure that it's profitable and then go and trade it. Okay. And as we approached this level yesterday, there was a couple of things that were really, really interesting and that make my eyes light up. One is the way that we approach it. So you'll notice that we didn't just dribble up to that level. Okay, we didn't just kind of steadily incline to that level. We shot up through this breakout flag pattern, and we had 1, 2, 3 massive bullish candles in a row. Very strong bullish momentum all the way up, and that immediately tells us that's clue number 1, because that doesn't go on forever. You don't ever see just bullish run forever, right? We know that that has to have a little retracement, a little correction. So that's clue 1. Clue 2 was it was approaching 9100, which is this massive discretionary level. Psychological number that's been respected multiple times in the past. In the last 4 years, you know, on the higher time frame, it's bounced off at about 20 times. Okay, and if you drill down even deeper, you'll see candlestick behavior at that level, and it will probably, you know, you'll read a story in price that will tell you actually it was respected 30 times, maybe 40 times. Okay, so that's clue 2. Clue 3 is it's a psychological number. It's a flat number, 9100. Okay, that's clue 3. Clue 4, we had some equal measured moves up to that zone as well. Okay, so we had this equal measured move. Those of you who are into fibs and Fibonacci, you know, you would have been eyeballing up. I'm going to just say, just from eye, this will probably be a 127 extension. So if I just go from low to high and back down, 127, 1414 in there, even a 16, you know, you've got that nice extension zone in there if you pay attention to fib confluence as well. Then you might have been looking at overbought levels of RSI. You might have been looking at divergence on RSI. But ultimately, what I was looking at is just a structure-based double top. Okay? So double top entry. And what I needed to wait for, as we was in the live room yesterday, we was waiting for this candle to close. Yesterday's session, and as soon as it closed, we got a nice close because it was up at the highs. It didn't drop all the way back down, and once that closed, what happened is the rules were met for a valid double top, meaning we tested the initial high but didn't break and close above it. And once that criteria is met, we can then place a next bar market order at market order as soon as the next bar opens, which is the open price of this candle, which is the close price of this candle. So we got in at about 90.99, literally 1 pip below the 9100 level. I thought I was going to get 52 pips out of this because of front running, but I actually got 55 pips out of this. It's just the way my orders got filled. So it's a 55 pip trade. And here's where it's important, right? People go, well, it pushed up in the end. That didn't play out. Wrong. This is where my target was. Why was my target here? My target was here because that is the optimized zone for targets. What did I say to you guys? I said targets will be based on structure. And as a trader, I don't want to be greedy. I don't want to be in trades for longer than necessary. Let me just delete this off so it's in the way a little bit. And I said the first zone I'm going to be looking at for targets is where I don't have to fight structure. Don't have to fight structure. So I literally just went above the close of this candle, right? Above the close of this candle and above structure. Now, I said, if you're taking multiple targets, you might squeeze some profits out, put some secondary targets down here or what have you. But for me, it's just a 1 in, 1 out. I don't want to be greedy. I want a nice 2-to-1 reward to risk, which is what it was. And I want to get in and out, make my money, and then get on to the next idea, because I'm not bearish this market. I'm bullish this market. But the reason I like you hold your horses at this level is because we've broken closed above. Now we're looking at a push to the upside. Now I can adapt and say, right, okay, now we'll look for a pullback down. What's likely to become support? Well, this 9100 is likely to become support now, right? So there is potentially a long trade. So being a trader is being able to adapt and adapt to the situation that you're in, okay? And not let your ego like dictate what you should be in and what you shouldn't be in, and then you hold on for dear life because you can't face being wrong. The market doesn't care about what you think. The market doesn't care if you're wrong. In fact, the market's only job is to prove you wrong and take all your money. So that was the trade. Nice 55 pip profit, quick in out after the session. We had it pretty much lasted all day, but it wasn't it wasn't painful. We didn't break. We didn't hover around the entry zone for too long. We didn't we didn't violate the entry level. We did momentarily, but it was short-lived. So nice trade. Now we can adapt. Now we can say, right, okay, what's on the radar next? Now, if you're looking for buying opportunities, okay, now we've broken closed above and put in this higher high, you're really going to be looking at a pullback down to this zone here, right? So we're going to be looking at this zone here, or even this green zone, which the 9100 level. The problem is at the moment is we've only just broken closed above it. So to push down, stop loss might be an issue to where you get your stop loss. The ideal situation for this particular setup would be like a ratio pattern where you can place a limit order. And those of you familiar with the Aussie CAD and cipher patterns, which were discovered by our very own Darren Oglesby, you'll see that there could be a cipher pattern completion if we push down. And all that'll do is just give you the aggressive entry. You'll get a limit order set, and then you can use that as your excuse for an entry to the upside if you trade these, right? If that's part of your trade plan. Just so you know, out of all the ratio patterns, I know some people are fans, some people aren't. The Fibonacci patterns, Gartley's bats, sharks, crabs, ciphers, butterflies, all the rest of it. My favorite combination is the cipher pattern on the Aussie CAD on the 60-minute time frame. Okay, that's my most profitable, 72% strike rate. So that's my favorite combination of ratio patterns, markets, and time frames. So not really going to keep an eye on that too much at the moment. This is now a pair that I can put to the side. Not really interested. We've had some nice profits out of this pair, so let's just move on to the next one. I'm going to remove all these drawing tools as we go. We're going to go out to the daily and do exactly the same thing. Good morning, Kamani. Morning, Mitchell. Eric, Daniel, who we got? Astrid, Lara, Paul, Daniel, Duncan, Push. Hope you're all well. I'm streaming this out today because I haven't done this for a little while. I think we did it last Tuesday, maybe the one before. But I thought it'd be make a change. Anyway, let's go to the Aussie dollar then. Aussie dollar again is another pair that I'm bullish on. Okay, daily time frame, we have been bearish, but we've recently violated structure. And on my trading time frame, I was using this as my higher time frame, the 4 hour, and we've been moving sideways. We've now put in a higher high, higher close. We're now putting in what we call a this kind of ascending channel. We're not at structure though, so I wouldn't be looking at that as a a counter move or anything. What I am looking at it is a continuation. If we can pull back and I want to jump on this, where are we likely to see the best place to jump on? Well, the first place to jump on would be 67.88 down to 67.62, that 25 pip zone there. Stop loss might be a problem because you've got to get stops below structure, and there's no structure. There's just this big, strong, bullish momentum candle. So, that might be a problem. But as we go down to the hourly, we might be able to, see a push down and a little retest down here, and in which case we can get our stop loss below the retest, below the double bottom, because that would be the structure. The great thing about a double bottom is it's an aggressive entry because you enter at market, but it's a conservative approach, which gives you a good reward to risk, gives you, good, it gives you a structure level to get a stop below. It creates the structure in which your stop will be placed below. So that's great. But for now, not a lot here on the Aussie dollar for me. The other setup we was looking at yesterday was the pound. Okay, so what we was looking at on the pound, if you was here yesterday, we go out to the daily. Go down to the 4 hour. Is anyone looking at anything on the pound, by the way? No? Morning, Mohammed. So this was a similar setup that I gave you guys as a demonstration yesterday. I was also in a pound Aussie trade as well. The pound Aussie trade, by the way, was a pattern entry. So this was it here. Had to adjust targets down to a 1-to-1 reward to risk yesterday, but we ended up hitting targets, which was nice as well. So yesterday was a really nice profitable day for me because we had a couple of winners. I did have a losing trade, but the trade that I lost on was only for demonstration purposes on here. So I'm not meaning to gloat or anything, because I do have losing days. I do have losing trades. Having said that, this year has been my best trading year in terms of consistent, like, I've had the lowest drawdown. I've had the highest strike rate. I've had the smoothest volatility in my equity curve, meaning it's steadily been going up. There's not been too many sideways moves in the equity growth. So overall performance, I've been more aggressive on higher strike rate trades with less drawdown. And that is me moving in the right direction. It's been my best year of trading if you weigh up those metrics. In terms of monetary returns and percentage, 2020 was, but that was because it was skewed by 6. You know, I got all the stars aligned on 6 trades that I took in early April in 2020. Plus, I had, you know, if you include Bitcoin and stuff like that, you know, there was a lot of money made that year. But in terms of steady equity growth and, you know, volatility, it was horrendous because it was like, you know, massive spikes up. So anyway, we was at the euro dollar. So the euro dollar, let's go. We was looking at this level here. Interesting level. We're consolidating on this pair. Let's just remove these drawing tools. Go out to the daily. And you can see we're moving sideways, right? If anything, I'm bullish on this. Okay, I'm bullish on this pair because we've seen this rotation. We're starting to push up. We are at this major structure resistance level that we've got to fight through a little bit. Okay, so you want to hold your horses there a little bit for longs. Not only that, we've already seen the last dip down and then a pull back up into that zone. So you want to be very mindful of this retest. You don't want to just buy this here, in my opinion. If we can break out and then push down, then great. You know, that would be a great buying opportunity. But the last buy for me was at this higher close candle right here. Let me just show you that. This would have been the last buy for me in this market. Now tested the highs, and now it's game over for a little bit. We'll just wait to see what happens next. 2022 has been an audition for me pursuing SMB. Great. How's it been? How's it been going? I'd love to know. I've got someone here as well called FTMO Journey 22. If you guys are on a funding challenge, or you're going to, you know, you're trying to prove your worth for a prop firm or what have you, I'd be interested to know how it's going, what you found, what you've discovered. You can use this session as a, you know, an open forum, a discussion with like-minded people as well. Please feel free to do that. The whole point I do this, right? I don't do these streams or any of these channels for monetization. Okay, I don't do it for my health. I just do it for value. And, you know, there's so much crap out there. I'm battling with people constantly on the DMs for people that have been scammed for fake accounts of me and all this. And it's just awful, you know. And the reason I started this channel in the first place was to do good, to push the right message out. And yet we're still getting scammers taking advantage and swamping the, you know, following all my followers and contacting them on DMs and Telegram and WhatsApp and Messenger and Instagram Messenger. You know, it's just tragic. But we will carry on. Cool. So yeah, my bias on this is bullish, but wait. Okay, wait. There's no reason for me to expect this to push down again. You know, we're bullish. Look, bullish. If I just bring on this tool here, just general. You know, you get the point. Bottom left, top right, we've got the swings, outside returns, the extensions, the pullbacks, the runs, the pullbacks. So we're on our way up. SB says, Jason, I am struggling with structures using 2 different time frames, e.g. 4 hour down to 1 hour. Okay. Can you show how to deal with them in terms of identifying swing highs and swing lows? So the way that I use multiple time frame analysis, okay, I'm going to make this simple because I actually use weekly as well and I look at monthlies, but I'm just going to give some solid advice on what I recommend you start looking at in terms of trading with multiple time frames. First of all, you're only trading on one time frame. Okay, so the first thing you want to do is pick a time frame that you can consistently trade on. And what I mean by that is, that's the time frame that you have to consistently at the same time every single day, or whenever in a window span of time, whenever the strategy like sets up the most based on your testing, that is when you need to be at your computer all the time consistently. So you don't need distractions like team meetings, going to do the school run, putting the bins out, doing the, you know, going to the gym and all that kind of stuff. So your trading time frame, which is this, let's call this trading time frame. Okay, feel free to screenshot this when I'm done, by the way. So we're going to call this trading time frame, and in here is going to be your consistent life time frame. Okay, your consistent life time frame. And what that's going to be is where your setups, trading, you know, setting orders and all that, all the rest of it. Okay. Okay. We'll color this in. We'll just color this in orange. All right. The next one. What happened to my indicators? Oh, they're gone. Never mind. There we go. The next time frame. Okay, so you can just trade on that time frame. You can just trade on that time frame, and that is where you're looking for your setups to complete. All right. The higher time frame is where you're looking for higher quality trades setups. So what you're doing on the higher time frame is you're picking a time frame 4 time frames out from your trading time frame, ideally. Okay, so if your trading time frame's the 4 hour, your higher time frame's the daily. If your higher time frame's the 4 hour, your trading time frames are 60 minute. Okay, if your higher time frames are 60 minute, the trading time frames the 15 minute. Yeah? That's pretty much a good rule of thumb. Okay, so this is your higher time frame. Okay, higher time frame, and what this is going to be is your bias, prediction, thesis. You know, what you think the market condition. Okay. So here you're going, overall, what direction is the market in? Is it bullish or bearish? Where's price likely to go next? How's it likely to get there? Okay. That'll confirm your bias, which will be bullish or bearish or consolidating. Okay. Or choppiness. Then you can start using your time frame to looking for setups that are only in that direction. And what that, just those two alone, what that does is stops you looking for anything. It stops you looking for bullish, bearish setups, because the thing with trading is there's so many ways to make money. If you stare at a chart long enough, you'll see reasons to go long and go short in any given situation. You really will. So you need a method and a way of filtering out low quality noise and identifying high quality, you know, trades. Okay. Now, the reason we introduce a lower time frame, or the reason I introduce a lower time frame in my trading, is, and again, the lower time frame's going to typically be 4 times lower than the trading time frame. All right. So is this valuable, by the way? Let me know if I'm just talking to myself. The lower time frame. Okay, so on your trading time frame, you can have too large a stop loss, or you can be waiting. You can miss out on trades because you've got to wait for a double top, or you've got to wait for, you know, if you're waiting for a double top on the 4 hour, like I did yesterday, that could take a lot longer, and there may be a way of entering that quicker, but still catching the same move. There's also unnecessary losses occurred by just using your trading time frame, and there's also not as much profit squeezed out of the trade as a result of just using the trading time frame. So the reason we use a lower time frame is for tighter entries and trade management. Okay, trailing stops, tighter stop loss placement, you know, getting in quicker, being a little bit more aggressive to catch the move. So this is going to be for entries, and also the trading time frames for entries as well. You don't need to use a lower time frame. Entries, tighter stops, trade management. Okay. So to put all this together, the higher time frame, you're saying bullish or bearish or ranging. Okay. Then once you've made up your mind, that's it. You're locked in on that. You don't change that. You go to your trading time frame and say, what can I trade? What setups can I trade in a bullish market, bearish market, or ranging market? Now, in a bullish market, you might have a trend continuation setup that you can trade. You might have a breakout setup, a flag breakout that plays in line with, you know, in that direction. Same with bearish. Or in a ranging market, you might say, okay, if we're in a range, I can only trade a Gartley pattern. Okay, or, you know, I can trade the reversals off of structure or whatever. Then you're just looking for those setups. And then when those setups are nearly there, you say, right, can I use a lower time frame to enter this and get tighter stops or get in quicker? Or, you know, can I trail my stops on the lower time frame, keep my target on based on the trading time frame? Yeah. So just to kind of stop clouding your mind, you don't have to look at structure on all these time frames. Your trading time frame is like your Bible, And then the rest is just to help you become more aggressive, more discretionary, better strike rate, okay, higher quality, and then squeeze more profit out and take less losses. And that's it. Or lose more, like risk management, basically. Money management. Make sense? And obviously there's a lot more to it than that. And I'm not going to go through, everything in here, but that's why you want to learn multi-time frame analysis. And once a week, I recommend you go out to the weekly or the monthly even, just to get some nice macro view of what's happening, where we're at. Particularly at the moment, there's lots of major levels being tested that you'll want to pay attention to. So that's that. When I was day trading, there was a 5 time frame process, a 5 time frame system that I was looking at. Okay. And that's something that I'll go through another day. Another day. So in terms of setups on the pound dollar, that's weird. Look, where's the pound dollar gone? Well, we're done on the pound dollar anyway. Let's take a look at the euro dollar. It wasn't anything on the pound dollar. Let's take a look at the euro dollar. Okay, holding this level here, 1040. For whatever reason, it's not a level that I would. So again, bullish bias on this pair. All right, yes, it looks like we're bearish, but if you just follow this, what's been happening, we had our run, pullback, run, pullback, run, pullback, run, pullback. We then put in this complex pullback, putting in these higher lows. We then violated structure, and now we're holding this range here. Okay, so we're neither up nor down. I'm not excited about buying this. I'm not excited about shorting it. I'm definitely not shorting it. But it's kind of a hold your horses moment, because we have violated previous structure, but we've also put in these really big rejection candles as a retest. Okay, so what does that tell us? It tells us that, well, be careful. We don't expect price to push up here, and as a result, we've just moved sideways. So what this does say to me is consolidation. So when we're going through the higher time frame, it's like, for now, consolidation. So now I flick through my trade book and I say, what trades can I take in consolidation? So I drop down to my trading time frame and I say, okay, I can trade on this pair, bat patterns, Gartley patterns. I can even trade certain flags, wedges, breakouts, compression channels, ascending channels, descending channels. I can trade off of structure. One good thing about the euro dollar that I always say to you guys is it really does a good job of putting in structure consolidation, where we horizontally test multiple times of a certain support and resistance level, and it's parallel. So really nice levels that you can aggressively trade. You can work at being more and more aggressive at trading these channels, and they happen all the time on the euro dollar. If you scroll back, you'll see tons and tons of these levels where it just pauses and there's 5 or 6 tests of the support and resistance level before moving on. So just because we're not directional at the moment doesn't mean you can't make money. Loads and loads of different ways to make money. So if you're a pattern trader, for instance, here we go. You pull out the cipher pattern and you say 1, 2, 3. We hit the 382. We hit the 120. We don't actually hit the 127 extension here, but you can see that there could be a pattern there, right? Not actually valid, this one. But you get the point. There's patterns in here. And then you say, okay, well, that one's not valid. We're now pushing back down. What could we look out for here? Well, maybe there'll be a bat pattern here. And we can start trading these and have fun with these whilst we're in this zone. So you've got a tool in your toolbox for every situation. I enjoyed learned a great deal on your interviews with Mike and Jeff. Your requests to them were fabulous. Excellent. For me, you can be consistent and conservative. This will cause you to be struggling to pass. But if you can balance conservation and being aggressive, you can have a ghost of a chance. It's not easy. It's definitely not easy. No trading's easy. So Michael and Kamani are basically asking questions about, you know, the difference in money management, risk management, and entries, tighter entries, higher high, higher close candles, and all that kind of stuff. You have to have rules, okay? So look, you have to say, and here's a good example of this, right? And this is what I've been working on a lot for the last, particularly the last 5 years. I've been working on really becoming better at strike rate and more aggressive. So I want to be more aggressive and be right more than I'm wrong, okay? And the way you do that is ultimately through a scoring system, okay? And what I mean by that is, if on your trading time frame you have structure, support resistance, angular support resistance, indicators, even handle number, you've got RSI overbought, you've got divergence on the MACD and on RSI, whatever, and you've got all these kind of indicators, that would be a higher probability setup, okay? In which case, you could say, I don't even look at the lower time frame for this, I just enter a limit order, okay? Or you could say, I just enter on a doji candle, or I enter on a lower low, lower close, all right? So let's just say we got like 7 points. That could be the most aggressive. You could have a 5-point trade where you say, well, I need a double top on the trading time frame. Okay. Then you could have a 3-point trade, right? Which is a C trade maybe. And you say, well, on a C trade, we've still got the structure that I need. And we've still got the amount of tests of major structure. We've still got minor structure. We've still got, you know, an even handle number. If we only have those 3 things, I can then go down to a lower time frame and look for a double top there. Or I can look for a, you know, some other conservative entry there. Right? So you have to have rules, regardless of what I'm telling you, no matter what time frame you're on, you have to have rules for everything in your trading, because the most important part of rules is so that you can replicate them on a daily basis. The moment you start chopping and changing and doing things off a whim, on a whim, that's when you lose consistency. So no matter what you're doing, what idea you have to be consistent and you have to test it. Okay, and then ultimately you'll have the answers. If I have a 1% risk method on the hourly for entries, but step down to the 50, so that's where you have to like decide where your stop is placed and where your target's placed. When I use a lower time frame entry, I always base the stop loss on the lower time frame, and then I place the target based on the higher time frame. So the risk management's done on the lower time frame. My target's still, you know, and you get a good reward to risk that way. And again, that's just personal. It's just what I do. It doesn't mean that I'm the best, because I'm certainly not the best trader that I've met. But I'm certainly not the worst. This was the retest trade on the pound Aussie. The setup that I took here. So look, this is a great example, right? Daily time frame. Are we bullish, bearish, or in consolidation at this point when we was doing our analysis yesterday? What do you guys say? Bullish, bearish, or consolidation? Let me know. You run the show. Bullish, bearish, or consolidation? Everyone awake? I'm running this on Instagram, in my trading room, and YouTube. Consolidation, okay? So now look, with my higher time frame, look how easy that is now for me. I haven't got to worry or stress about looking for trend continuation, looking for counter moves, looking for all this, that, and the other, I just go, right, forget trend continuation. So that rules out flag patterns, breakout patterns, trend continuation setups, my JG trend continuation with all the 5 different entries. Forget about all of that. Very quickly, I just go to my toolbox that has consolidation setups in, and I go, right, let's go down to the trading time frame and let's look for consolidation setups that I'm allowed to trade because I've tested on this pair and have found to be profitable over time. Okay, that's it. That's all I do. Now, to add to the confusion in here, I will say I trade multiple time frames. Okay, so I still use the daily as my higher, my 4 hours, my trading, and my hourly as my lower. But I also use the 4 hours my higher, 60-minute as my trading, and 15 as my lower. And I do that simultaneously, dynamically. And I've been doing that for many, many years. But it's only because I've tested on all of those time frames, and I've tested the whole portfolio, trading it that way, and it's been profitable for me. All right, it's a lot of testing. You're not going to be able to do that just off the bat straight away. You can't learn or buy discretion. It has to be earned over a long period of time, and that's just the work that I do. When we break up in about 20 days time, I start about 40 hours of tweaking and optimization on my trading. Do that every single year without fail. Over Christmas, I spend 40 hours just optimizing my trading systems. So what happened to me yesterday is I went down to my next trading time frame and I say, well, okay, I'm still looking for consolidation patterns. I'm not looking for trend, nothing like that. So here we go. X, A, B, C, D. And you guys in the trading room yesterday, you saw me take this trade and we hit targets pretty pain-free. We had to adjust targets during the session, which brought it down from about a 1.2 to 1 to a 1 to 1. And then we came out of the trade still in a nice... I made about 100 pips yesterday off of these two trades, so pretty decent. Now, we're just looking for the same thing, and there's nothing here at the moment. So nothing here for me, just move on. Makes the analysis very easy. Had the money out of that one. Don't have to keep looking for trades that aren't there. We just move on to the next one. We don't want to be a slave to the chart. Don't want to be glued to the screen. I got into trading for less screen time, less time for money. So there you go. Quite a few people watching. Has anyone got any questions so far? I think what we're going to do is we'll take a quick coffee refill because this is empty. And let's just say we'll take a quick 10-minute break. Okay. We'll come back at 8:26. Okay. And I will close off the stream. We'll go straight into the live trading room. And for you guys on YouTube and all the rest of it, you can come and join us in the live room, or I'll see you next time we're on here. A Novi says, what was the reason for adjusting targets on yesterday's trade? I didn't adjust. Oh, on this one, on the pound Aussie. So what happens is, let's just do this before we get a quick coffee refill then. Let's just explain this, okay? So if you're familiar with Fibonacci patterns, okay, bat patterns and things like that, let's find the pattern so I can explain this real clearly. Zoom right in. Okay. So with this playing out in real time, the pattern actually was this: X, A, B. Okay. And if you imagine in real time, we put in the C and then we're just watching price push down, and we need an 886 completion. Okay. 88.6% of the move. So the 886 completed down here. So at this point here, we entered the trade because this is a buy limit order. We triggered into a buy limit order, and I have my sell stop order down here. Now, as you can see, price started to push down. Now, how we set targets on these patterns are like this. We go from A to D, and we want to take a 382 retracement, okay, because that's a high probability move. As price pushes down beyond the D completion, we want to adjust this so that we're still looking for the 382 move. Make sense? Because otherwise you're just looking for no man's land. We want a 382 retracement, so it's something we can test and consistently trade. So we adjust targets with price when it pushes beyond the D completion. And that's unfortunate. We never want to do that, but we do it. And look, what I mean was when it went from 1.2 to 1 to a 1 to 1, if I just show you the long position, originally we got in here. Okay, so the targets would have been 382. And the stop was an ATR below the low. Okay, it was about here. So it's about a 1.5 to 1. Okay, and then what happened is we had to adjust the target. So look, we had to adjust this down. Sorry, we had to adjust. Had to adjust this down as we moved the target down. So it went down to about a 1 to 1. No worries about asking so many questions. That's the whole point of this. You know, what's the point in doing this otherwise? Otherwise, it's just me talking to myself. Sorry for, can you show us the cipher pattern examples? We'll see if we can see another one. We're going to grab a quick coffee break. We'll come back at 8:30 on the dot. You guys in the live room, I'll see you in 10. Those of you who are on YouTube and Instagram, thanks for watching. Let us know in the comments if you want to see more of this, and we'll stream more. I'll see you in a minute.